Okay, so let's get back to the GBP AUD. We were trying to look at steady the trend from this area up. So we saw that the trend was bullish around here, and then it changed into a bearish trend somewhere here. Okay, so pay attention that this time frame is the weekly time frame. Okay, so um now from after the trend changed, we saw a pullback. We saw price break this structure into this area. Then we saw price makes a high again. Then we saw equal lows. Price pull back internally. Then we saw price makes a new low here, lower low. Then it pulls back. If you can see, this is a weaken, like price pushed up back to the entry, but it's rejected. This was a rejection. So the body closed here, somewhere here. Okay, the body closed somewhere here, but we have to still account for the wick. So let's take price up. And because this wick could not take out the previous lower high, we cannot say that this is the new lower high. Like we cannot say that price broke this high. Okay, that's what I want to say. So what we can do is that we will still have to see this area as the important lower highs. Okay, so let me take it again, the trend again. So now we're trying to establish one who is in domination here. So one originally was bullish, then it changed. So we have a lower low, a lower high. Then straight we got a lower low, then we got a lower high. I'm using here because I'm using the wick because it is in the same level with this high, which I would have used previously. From here, we have price coming down to make, let me squeeze the chart a little bit. Price coming down to make a new lower high. So you see this area? Good. A new lower high. Then it pushes up to make a new um a new lower low. It pushes up to make a lower high. Then it comes down. This low, move up, low, move up, low. This is kind of consolidation. So I will take the last low point as the most current lower high. Okay, so this is what we got. This is what we got. Okay, so what is this trend? What is this trend?
It's a downtrend.
This is a downtrend based on what we are seeing. So we can say that from up here, when direction change up to this area, it is a downtrend. So what we have to do is to look at the most important lower high or the most important lower highs are we have this level, the top here, then the next one was here. Okay, these are going to become our external highs, external important highs. Okay, reference highs, external important highs or reference highs. Okay, so those are the highs that we will look at as our anything happening in between them are called internals, internal structures. Okay, are internal structures. So these levels are our external highs. Okay, lower high, lower
Yeah.
high, lower high. How many? One, two, three. We have
Yeah.
three. Now, then we see that from this low point here, price moves up and crashed the internal high. Sorry, the external high. Crash here. Took it out,
Hello?
dropped back to it, and pushed up. What does this mean, Abubakar?
Um, Alaikum. New change of structure.
Good. Change
Now,
of
Alaikum.
direction or a break. Okay. So here, the intention or what happened here means that the market is changing direction or the market is trying to change direction. That is the meaning of what is happening here. Okay. So if we are taking it this way, it means the market is trying to change what direction. Okay. So we have price breaks this important reference lower high, the last reference lower high, retested it, and boom, moved up. But if price is going up, where do you think, if price wants to go up, where do you think it will reach out to after taking out this last reference high? It will move to the next external high. Okay, this external high is taken out. So in case it wants to go up more, where would it want to target to in the long term? The next external high, which is here, this level. Do you get it? Good. Your voice is still down. I don't know why yours is like that. I don't know why. Um, but I can still hear you a little. So now we have a break of structure. The only way that we know price might want to get to the next external high is for price not to crash the low, this low. Because after taking this high, if price is to drop to crash this low, then the break of structure or the change of character we saw here is not valid anymore. Do you understand? And the market does this a lot. Okay, it will break structure for you clearly, but it will also go back and take the last lower protection, lower low out. Okay, if the market does this, is to do this, it means that this break of structure is not in play or is not active yet. And that means that the market might be using this new lower high as the new or as the most important lower high. Okay, it means the market looked down upon this area, this external high, and it is treating this one as the most current external high. Okay, are you getting my point?
Yes, sir.
And
I
for
got it.
those who trade trend line, you might see this perfectly. If you put a trend line from here, cross it through to this high, you might see that it fit well into this high that price made. Okay, if you put a trend line from top here to this area, it touches that. Okay, so um, this is the situation. So we have to think about this in two ways. Okay, we have to think that the market can deceive us that taking out this earlier or smaller external high here, it can deceive us to be thinking that this is a break of structure, and therefore we should be thinking, looking at the market pushing up to the next external high. Okay, it might deceive us and rather drop down to make a new lower low and then use this area rather as the external lower high. You get it? So we have to have all those thoughts in mind. But if, let's say, price has genuinely broken structure or changed direction, it's changing direction from the bearish market to the bullish market. Let's say that. Okay. So the moment we see that this has happened, what do we do? When we see there is a change of direction like this, what do we have to do? What I have said is that we have to use your Fibonacci. If you won't use it, you can use your eyes to guess from the low to the high that it makes. And then you need to map your discount zone. Discount is anything below 50% because now we know there is a change of character or a break of structure, which means the market wants to now start to make bullish structures. The market wants to go bullish. So we can see we have below 50%. So let's see. Price drops back after the break of structure straightforward into 78.6%. Do you all see that? Which is discount. Now, from the 78.6%, we should expect price to make a new high, okay? To break this high. This will mean we have a second break of structure, okay? But do we have a new high? Do we have a new higher high?
Uh,
Do we have a new higher high after dipping down to discount?
no, no.
No. So this is one thing we should be expecting. That's why I said if this prediction or anticipation I'm having for the sell, if it fails, it means the market wants to target making a new higher high from this high. Okay, if because if it doesn't sell from here, then it wants to make a new higher high. Okay, it wants to make a new higher high. So these are the two options. Now, so we get 78.6% and then price pushes up back into this area.
All
Then it drops back and fails. Okay. So failing means that we have, so now let's look at the bullish structures. Now we have a high, a lower high. So what do you think will happen to this area? Has happened to this area because price went up, make a high here and pull back lower high. But now that lower high has been taken out and we have a new lower high. So what do you think has happened to this?
the break of structure.
This has become internal structure. The market has it didn't respect this. Okay, the market did not respect this. Okay, it pulled back, swept it out into discount. Okay, so this has not been respected, which means we have a high, a higher high, and we have a lower high. This is the lower high. All that happened here before we got this high, these are internal structures. Okay, so we have a lower high. We need a higher high. If this pair is going to be bullish, we need a higher high. Currently, we don't have a higher high. We have another lower high. We have another, we have a lower, but a lower high here. This and this are internal structures. Okay, this and this. Okay, they are internal structures. They don't if you are counting the external structures, this high and this low, they are not part of it. Okay, we can't utilize this area and this area. This and this are the important point for now. Okay, so the market goes up again, took out this internal high here, and then it's here, and made it, I think it made a wick into the blue line, into the top here, and there was a rejection down. Okay, it made it to here, but it did not close body above you. It did not make a new higher high. This is what we call failure swing. Okay, we are expecting a new higher high after price drops to discount, but it goes up and it does not make a new higher high. Okay, so the meaning of this is simple. It means that the sellers that are at this level it looks like the sellers here are very strong. Okay, and it looks like this pair is likely to resume back to the bearish trend. Okay, so if that is going to be the case, it looks like this pair might end up giving us a lower low, a lower low. If this is to happen, then it means this initial lower high here, which we used as for our break of structure this year, initial this price hit here pullback here. This area, it means this area was not counted as a valid external lower high. It was not counted by the market. And you might see this if you move to, let's say, the 3-month time frame. Okay, if you move to 3-month time frame, you might not see this area is here, but you can only see only one candle that retraced up. Okay, and for you to have a valid move, you should see at least 2, 3 candles. Okay, 2, 3 candles on a row. Okay, so on the 3 months time frame, it is just one candle. Okay, so we might not use this as an impulsive move or as a stretch, an expanded move. Okay, but if you look here, we can see that price, we have one candle and then a second candle that moved up before the wick rejection of the wick. Okay, we can see here we have 1, 2, 3 candles before we got the high. So these ones they are valid. We can use them as valid highs. Okay, from the 3-month time frame. So if we are speaking in that sense, it's likely this market will want to deceive all of us that it has broken structure and wants to move up. And then it will end up failing to give us a second break of structure. Then it will rather print a new lower low. Do you get the concept I'm trying to talk about? Do you get the concept? Now, Miss Uche, are you still at work? Are you following or you are at work? Okay. So um so we have to be able to understand all these options so that whatever the pair will be doing, we will be able to catch the concept, what is happening. Okay, so one, if we look at the 3 months time frame, this area might not seem like it's a valid high that could merit a break of structure or a change of direction. But on the 1 month time frame, it looks like it is. Okay, on the 1 month time frame, it looks like it is a valid move. Okay, so but we have to put all these thoughts into our mind so that whatever is happening, we'll be able to understand. So now we have been able to establish the trend. The trend is bearish, but it looks as if from the 1 month time frame, price has broken structure and it is changing direction. Now, for this directional change to be perfect, we need a second break of structure. Without a second break of structure, this bullish move would not be perfect. Okay, without a second break of structure, this bullish move is not going to be perfect. Okay, so that is one thing we don't have yet. Okay, two, if we are not going to get a bullish break of structure yet, then the market might want to drop back into the discount zone. Okay, and that's why I am predicting the market should drop back into this area of discount. If it gets here and it's able to move up again and makes a new higher high, then the bullish market is now active. Then the bullish market is now active. But if it gets here, it moves up, makes internal structures, and still drop, okay, and makes a new lower low, then it means the market is continuing being bearish and therefore was not using this area as a valid point to merit a break of structure, okay, to merit a bullish break of structure. Therefore, we are going to have this high as our new reference lower high. Okay, our new reference lower high. So these are the options I want you to think about as you continue to study this pair from the higher time frame. Okay, so let's now talk about defining our area of interest. To define our area of interest, it is simple. Okay, so the most recent place where we've seen a reaction in the market is here, and then also We are seeing a reaction here, and we are seeing a reaction here. Okay. Price pushes up to this area. The market, it pushes down, which means sellers are here. It comes up to this area here, it pushes down again. It comes up to this area, it pushes down. Now, market was somewhere here. Buyers push it up. Then it drops back to this area. Buyers step in, they push it up. Then it drop back to this area. Buyers step in again, they push it up. It means buyers are sitting at this level. Okay, so you can, where I put the blue line, or even when you extend it down, buyers are all around this zone. Okay, buyers are here on the monthly time frame. Okay, so now we have buyers sitting down here at a level, and we have sellers up here. Okay, and then when we can scale to the daily time frame after seeing the monthly time frame area of interest, or we can even go to weekly time frame. Yes, okay, weekly time frame. So we have these areas where there have been reaction. Okay, so um sellers are at the blue line, okay? And then sellers are here, sellers are here. Why? Because price gets here, they push it down. Now look at this area too, where I've put the yellow area, this area here. Okay, this is the weekly. Abubakar, what do you think? Which people do you think are here? Inside here, internally here? Sellers. Because price touches here, they push it down. What about here? In the middle here, here. Abubakar, are you with me?
Yeah, I'm with you, sir. Yeah, the sellers. The sellers are there.
Sellers are here.
Okay.
Good. So, what can you say about this level in the middle here? If price is to stay below this level, what do you think will happen? Huh? If price is to stay below this level, what do you think will happen? We can all see that at this level, sellers pushes price down. Okay, here too, sellers pushes price down from this here, where I've put the yellow rectangle. So I'm asking, now price was able to go above the level into the top here where sellers were still there because in the past here, sellers were still active here. Okay. So, but I'm asking, inside the internal level here, if the market stays below this level, what do you think will happen?
I think it will reverse.
The sellers will still take charge. That's what I want you to say. Okay, why? Because inside, anytime the market stays below, okay, so let me take the yellow rectangle out and then let me bring it. Okay, I just put it there. When price moved up and hit here, sellers push it down. Price move and hit here again, second time, sellers push it down. This time, when price got there, it broke up and went above it. Then, then it now dropped. And then when it dropped, it was being used as support to go up, but it has failed to go up. Then you can see the market drops back, goes up, drops back, goes up, and then drops back, and it is staying below the level. But we can see that below this level or from this internal level here, sellers always want to take control because they've done it before. Look here too. Look at this place too. Okay, this same rectangle where the rectangle is, sellers push the price down. You understand? So this is what I want you to be looking for on the chart. Though price can go above it, if it stays below it, you know that the sellers that took charge in the previous data or price action are likely or highly possible to take control again. So this is the reason why I am This is one of the reasons why I am predicting a sell, okay, for next year. Okay, I am predicting that if price is to push up, because now we can see a double bottom here, which means sellers are trying to push price up. Okay, and we can see there is an imbalance here right now, and that is the reaction we are seeing. Imbalance, bullish imbalance. Buyers are pushing the price down. Buyers are here, double bottom. If price is to push up to this zone and it stays below the zone, it stays below the zone, sellers will take control. So inside this area, we should be looking for more evening star and head and shoulder pattern. If price is to get to this level next year, 2026, we should be looking for evening star and head and shoulder pattern on the 4 hour, 1 hour, 30 minutes or daily time frame, lower time frame. Do you understand my point? If we are able to see that, we can sell the market. Okay, we can sell the market and target the next area where buyers were active, which is exactly where I put this blue line, this area. Okay, so that is it. But if the market is able to push up and it gets here and it still go above this level, then it means the buyers will now take control over the level. That's why I said the moment the stop loss is hit for this anticipation and price goes above the blue line here, it's likely that it might want to reach up more to make a new higher high. Okay, because already we are expecting this bullish market. We are expecting we can see the market wants to be bullish, and we have a first break of structure, but we are expecting a second break, and we haven't seen that yet. So if the market gets to here and the sellers do not step in to push the price down again, and it goes above it, and if it goes above the blue line, we are likely to get a new higher high. Do you get the scenario here?
Yes, sir.
Good, perfect. So now we've been able to identify an area of what interest, and we've established the those in domination and the possibilities of who might also be in domination and what will happen to see that either buyers or sellers are in domination. Okay, that's what we've tried to do right now. Now, we have to be able to move. I can see something right now. So, even without any stress, I can see that um, the market is making a head and a shoulder. I can see a high here. I can see a lower high, and I can see a higher high. This is evening star. High, higher high, lower high. So we need, and this is like the neckline. This is a small right shoulder, a small right shoulder here. Price breaks the neckline or the trend line. We need price to go back and retest the right shoulder. And that's exactly where I've put the entry. So if price is to retest the right shoulder and stays below that level, the sellers who were able to push price down in the past inside this internal level would likely step in to make this trade a success. Okay. But if it goes above, then it means the head and the shoulder wants to fail. And the head and the shoulder will not fail until the head of the shoulder is taken out. If your head is cut off, will you be alive? No. So the head is here, which means the stop loss for this trade should originally be at the top here, the blue line. Okay, if the head and the shoulder pattern is what I'm using. But for me to hold a trade up to the top here and my entry is here, that is too much loss. Okay, so I wouldn't hold the trade. Okay, I will allow it to go up, react if it wants to go up, react with this blue line again, maybe make another head, double top. And then if it comes back down below this level, I will sell. Do you understand my point? I will sell. Okay, good. So this is the anticipation. But if it goes up and crash the head out, then it means we are looking for a new higher high. A new higher high. Perfect. So with these anticipations and understanding from the higher time frame, knowing that we need price to retest or make retest the right shoulder, and seeing that we have a double bottom here and price reacting to this internal area of bullish inefficiency, you can now scale to the lower time frame, let's say 4 hour time frame. Okay. Then from the 4 hour, we can see a perfect double bottom. Okay. From the 4 hour, we see what is happening. So we see we have a double bottom formation. Is there any reason for price to go up, for price to take out this high out?
Yes, sir.
Is there any
Yes,
reason?
sir. I just want to
Yes,
know.
I'm listening.
Yeah. Um.
I'm listening. Are you asking a question? Are
This
you asking a
green
question?
red. I want to know how. This.
You want to know what? You want to know what? Okay.
Red and green. This one. Where the price will hit before you start taking your profit. How
I
can you
really do
demonstrate it
not,
on
I
your?
really cannot hear you. I really cannot hear you. I don't know why. Can you come again?
Concern about this take profit by this arrow, this green and red. Can you hear me?
Yes, I can now.
Okay. This one, this drawing, green and red. I want to
Uh-huh.
know how you can demonstrate it on your chart.
This one,
Yeah, yeah.
you are asking what?
How can you demonstrate it on the chart?
How can you get it on the chart?
Yeah.
No, it's here. It's one of the tools. When you go to the trading view, check first option, the left side, the tax pane, left side here, up the options here. One, two, three, fourth one. When you click on the fourth one, you will see when you want long for buys, bullish, you select long like this, and then you just click and move it up like for buys. Okay. And when you want
Okay. Thank you. Yeah.
sales, for sales, you select the short like this. You put it at where you want to put it, your entry, and you can stretch it to cover where your stop loss will be. You adjust it. You understand?
Yes, sir. Thank you very much.
Okay, good. So it's on the trading view, the left side, the options, the option one, two, three, four. When you click, you can see long and short. What? What else?
It is okay. It's okay for
Okay,
now.
perfect. So what I'm saying is that we looks like we have some kind of double triple top here, and price is reacting inside of this inefficiency here, because this area, it looks like this area is the most current low point that was able to take a previous internal high here towards making that run to the higher point. Okay, so this looks like a correct range. So price has retraced let's say we measure here, price is back to 78.6%. Okay, so it makes sense for price to react. Now it's hit here, reacted to 61.8%, back to 78. Okay, so